Welcome back to Next Gen Investing. It's now time to discuss the week that was in Nvidia as GTC failed to enthuse. We are down on the week, lower about 1% today, but here to hopefully bring us some optimism on the future of Nvidia, which also to me translates into the future of AI, frankly, is Hatem Diab, the managing director at Gerber Kawasaki. So Hatem, thank you so much for joining us today. I'm hoping that you had some positive takeaways because what was coined as, I know, the AI Super Bowl, this was not a very good Super Bowl, if that's what we're calling it. So walk us through the sort of the streets takeaways and your takeaways.
Hey, Jenny, good to be on. I beg to differ. I think if you wanted to see what the future is going to look like, there is nobody like Jensen Huang to really lay that picture out in a way that is so descriptive and so clear as to where the world is going. And frankly, when you look at the progression from generative AI, which is where we are today, to reasoning model that's are happening now, to agentic AIs and full self-driver down the road and robots, Nvidia is really the only company out there that is building the infrastructure to run all of these things, and it's just the beginning. So I think if you're geek enough and you listen to some of the stuff and watch some of the videos they put out, you see where the world is going, and I think that's why you should be excited about Nvidia going forward.
Tim, I watched it. I watched that keynote, and I liked it. I mean, Jensen had great energy. He talked about things that are coming up, as you know, and then the developments that he sees the next leg of AI growth is going to be in robotics. I wonder if, in terms of the lackluster response, is because if expectations were so high, have been so high around Nvidia, if that's part of it, or if they're also because there wasn't nothing necessarily new, because we kind of knew about him that Vera Rubin was going to be coming. Did we need to hear about another chip, or is that not even necessary, given we still have to address the demand that's out there?
Yeah, I think you're absolutely right. I think the expectations are so high, and frankly, investors are having a hard time wrapping their heads around, what this is going to look like. We've already seen almost $300 billion in data center deployments or investments from the big tech companies, and I think people are not really understanding what that means. I think what Jensen told us in GTC is actually that pace of investment is going to accelerate to almost $1 trillion by 2028. So it's almost like investors don't believe him, or at least don't understand what that means for the bottom line for Nvidia. And plus, I think there is a bigger macro story where people are just anxious about what the world is right now with all the slow down fears and some of the political stuff that's going on. So it's just hard to impress in general because the market is correcting.
Yeah, I think that's a good point. Also, on the back of all the DeepSeek fallout, I think that's still a major overhang that doesn't seem like it's able to be just completely shifted because of GTC. Although historically, GTC isn't really this major catalyst that I think the street was saying it was. I mean, frankly, I thought that was a little bit mismatched. But things also to be excited about: GM and, of course, Nvidia partnering up for more autonomous driving. But is this GM coming late to the game? Because they ditched Cruise just several months ago, now partnering with Nvidia. I mean, they're just trying to play catch up in a market that could leave them behind.
It's a last-ditch effort from GM for sure. I think every kind of OEM or legacy car manufacturer has to figure out how they figure out full self-driving going forward, and they all can't do it themselves because they're just not an engineering kind of DNA company, and Nvidia will be the firm that's going to provide the solutions for a lot of these OEMs. So GM is, I think, only the beginning. We know Mercedes is already working with them, but a lot of the other manufacturers will be working with Nvidia for that. Tesla obviously has their own full self-driving, and that's still kind of working itself out. But I think Nvidia will be the other player.
Yeah, Hatem, the street is still very constructive on Nvidia, right? I look just to see, I can't find a single sell rating still, largely, essentially in the buy camp. There are some holds on it. UBS coming out today, reiterating their buy rating. They've got a $185 price target on Nvidia. One of the things that they noted that they feel like there's not enough attention paid to with regard to AI and Nvidia's positioning there is sovereign AI, meaning the AI growth story when it comes to governments and their needs, and that's an overlooked factor that could help boost demand. Hatem, do you feel like that's one of the things that was overlooked as well?
Absolutely. I think industrial AI is one, but also sovereign AI, right? Like when you look at where we are right now internationally and how all the tension that exists between Europe, and when I talk to my clients or our clients in Europe and other places, they really feel like they're left behind. They feel like they need to spend the money to really build their own AI infrastructure. And right now is really all the big tech companies. So you're going to start to see a lot of the European companies announce a lot of big AI projects. And frankly, Nvidia, again, is the only game in town when it comes to trying to build that infrastructure. And yeah, the street is not really seeing that just yet. But as we've seen some of the, for example, some of the Gulf states starting to invest a lot in these things. And I think Europe is next.
I completely agree, and I also think there's still like major opportunities here in the U.S. and some of the energy bill that's necessary to even fulfill, I think, the capabilities that some of these companies talk about in relation to AI. But last but not least, I got to get your thoughts because you mentioned some of the turbulence regarding the overall market, which is obviously a huge factor. But as far as those critics that say valuation was just too high, it set Nvidia up for this fragility we've seen for the last several weeks. I mean, do you make the argument of, yes, that this name perhaps was a bit overvalued, or are you in the camp of hey, look at its earnings multiples, look at its growth? I mean, this name justifies that high multiple it's carried for quite some time.
Yeah, I think all of those things can be true, right? I think the valuation for Nvidia was never super expensive, actually. But I think the valuation for the market in general, Nvidia being 5 or 6% in the S&P, was high, which meant that when a correction happened, just everything got sold off. The reality is, when the risk-off mentality goes in, like you're going to see everything really selling off, and Nvidia has been a victim to that. But ultimately, as you said, you should look at the PEG ratios, right? The price to earnings growth. Nvidia is still going to grow 60-70% going forward, for at least for the next 3 or 4 years, I think. So for that reason, I think it's definitely a buy.
Yeah, and I'm glad to hear it. We had to end this week on an optimistic note because I'm tired of all of the beaten down headlines on Nvidia, which is down on the week, but modestly lower today. And GTC still had lots, I think, to be excited about in the future. So we needed that optimism. Thanks so much, Hatem Diab, the managing partner at Gerber Kawasaki, for joining us today for that Nvidia breakdown.